All right, now to our first conversation. Nigeria's housing finance market has long struggled with limited long-term capital, leaving middle-income earners with few options for mortgages and developers constrained by funding. Now we're going to explore major steps towards addressing this challenge. The Mortgage Refinance and Expansion Investment Fund, or MREIF. Join us in the studio now to discuss. We have Mr. Wale Odutola as a Group CEO, ARM Holding Company, who will discuss how the fund actually works and why listing it now is strategically important. It's great to have you on the show, sir. Good morning.
Good morning. Good morning.
Fantastic.
Happy to be here.
Yes, sir. So, when I look at the housing markets, if you're looking at one's trying to, buy a property, it's been a very difficult process, especially for those that you don't have that lump sum, to go and buy,
absolutely,
a property. And now we have this fund. From a market standpoint, what specific gap do you think MREIF is going to close here? Because most of the time, you hear people talk about mortgages and you find out that a mortgage is just maybe 2 years. Who's going to pay that off in just 2 years?
I think you've answered the question with your question, actually.
Right.
I think the mortgage market in Nigeria is almost non-existent. We have roughly about 32,000 mortgages in issue, and that's a nation with over 200 million people. South Africa, for instance, has 1.6 million mortgages in issue. This is as at 2022. That tells you there's a huge gap because, one, the average Nigerian cannot really, in reality, aspire to his own home. And if it did, he would not be able to fund it. So that culture is almost non-existent in Nigeria, where as a young man or young woman coming out of school, getting a decent job, you're already thinking about getting on the housing ladder in order for you to continue to grow your assets, because one of the biggest ways wealth is accumulated in any nation is through property. So that is non-existent in Nigeria. Now, the gap MREIF fills is providing that long-term capital that allows financial institutions to create mortgage products and then sell those mortgage products to the average Nigerian, who then, through that product, is able to acquire a home and begin to build, wealth as in doing so.
Right. And, looking at this recent listing, how does the listing help, to help us reach this goal that we're trying to get to?
So one of the biggest challenges I think we've had growing this product has been visibility and trust. Nigeria, from a retail standpoint, we're not a credit market. That your average Nigerian does not want to take credit, understandably so. Expecting someone to profitably take credit at 30%, 40% per annum, it will ruin the average person. More so when you then start thinking about this on a long-term standpoint as well, where you're taking credit for 10 years, 15 years, 20 years, you would have doubled the amount you're paying back in 3 years if you did that. Now, the listing allows us a number of things. It allows liquidity, i.e. for investors that are already in the fund that provided the original capital for the fund. Listing it allows them create liquidity from it if they want to sell some of it and bring in other investors into the fund. Listing provides visibility as well. It provides transparency. It provides a lot more clarity around how the fund is priced, so that the average person can see it and understand how it works. So all of those things I think we have achieved with the listing. And I think it also then provides a pathway to ensuring that from 250 billion that we currently have under management in the fund, it provides a pathway for us to get to the 1 trillion program size that the federal government approved for it.
250 billion.
250 billion.
Right now.
Right now.
The target is 1 trillion.
1 trillion.
Okay, that's for the fund. So the model has been described as a blended model, involving MOFI, ARM, and the private sector. How is this? What makes this combination viable to actually kickstart, the mortgage market in Nigeria?
Okay, so
because we've had so many.
Yeah. So let me tell you my personal experience. I have a mortgage, or had a mortgage that is running now. That mortgage started at 16% per annum in terms of interest on the mortgage. And in the last 3 years, it went up to 33% interest per annum, which you can't, it's hard for you to argue against it given the sort of volatility we've had in macroeconomic variables over the last 4 or 5 years or so. Affordability becomes a problem for me, clearly. And how then does the average Nigerian deal with, that sort of dynamic? Now, what MREIF allows us to do is blend government's investments with private sector investment. And government, knowing that this particular product and this particular sector needs to be catalyzed, you cannot allow full market forces to be engaged in an environment like this where there's so much volatility in macroeconomic variables. Government recognizes that and they say, well, we'll put down X amount to show our commitment to developing this market. We expect that you would crowd in private sector investors who naturally will demand market rates for their investments, whilst we will take a haircut or take a step back because we know the long-term goal is really to catalyze this market. But by blending that, then you're then able to offer interest rates at what we're offering, 9.75%, single-digit interest rates. Without a product like this, and without ensuring that the private sector is involved in its thinking, in its development, and its execution, we will not be able to promise a 20-year mortgage, for instance. So I think what the government essentially has done is put their money where their mouth is, commit to a long-term plan that helps catalyze the mortgage sector, and allow the private sector drive that plan going forward.
Right, and talking about short-term loans, definitely that's a big bane for the mortgage industry. So we're talking long-term loans here for about 15, 20 years, even more.
20 years.
20 years.
20 years.
All right. Let me not be an Oliver Twist here. But is there any risk? You did mention, single-digit interest rate. Is there a risk? What happened to you could happen?
No. So our rates are fixed. Our rates are fixed for the duration of the mortgage. So if you lock in a mortgage at 9.75, it's fixed through the life of that mortgage. So there is no risk of that happening with MREIF.
Right. All right. So definitely, I'm sure there's some home seekers, at this point, are looking to buy a house, and they'll be wondering, how do I latch on? To this, and is it going to get to everybody?
So when we started out, we were at zero, obviously. In the space of 3-4 months, we've ramped up to over 1,000 mortgages and disbursed over 63 billion naira. That is a lot in a market that was almost non-existent prior to MREIF coming on board. So I think the risk is you not latching on early enough to get on this train, because the train is moving. So my encouragement to anybody that wants to own a home, and we should all aspire to own a home, is to, there are various avenues that you can access the mortgage. We have a website, MREIF.com, that you can log into, do an assessment to see where you fall, how much of a mortgage you can afford. On that website as well, we have properties that are listed by various developers. You can do an assessment of the properties, go for site visits, and secure your properties. And through that website, you are then able to begin your application process through any of the 17 financial institutions that we're currently working with. Alternatively, if your bank is listed, or your PMI is listed as one of the institutions that we're currently working with, then you can work through your bank as well, secure your property, approach your bank, request for a mortgage, the MREIF mortgage specifically, and your bank will walk you through that process. Typically, we find that it takes between 3 to 4 weeks to complete that process, which is really fast given how long it typically takes to do this.
Right.
So it's a fairly straightforward process, and you either approach your bank or you go on the platform and walk through that process on the platform.
Okay, so I'm just imagining now, say for instance, I'm trying to buy a home, at this point, and I earn maybe between per annum, maybe around 2 million, $1 million per annum. What house price category can I aim for? And how much can I qualify with that kind of salary in a year?
So the way I would answer that question is that if you go on the site, you have a mortgage calculator that essentially matches your income to how much you can reasonably take as a mortgage. Bearing in mind also that you're only allowed almost by law and practice to only take up to 30% of your take-home income for a product like this. So all of those things have to come in play when you're taking a mortgage. And the truth also is that as individuals, we typically want the best for ourselves, and we stay in a particular area at this point in time. We're renting that property and giving wealth out to someone else. Oftentimes, you find that you are not able to buy a property in that area at this point in time. But what is important is that you get on that housing ladder as quickly as possible. So you may have to move a little bit far out, but it is your property. You're building equity, you're building wealth. And in doing so, you can then build that wealth and ultimately use that as your equity in another property, in probably an area that you prefer. But the key thing is to start and get on that ladder, because if you don't get on that ladder, it will continue to run away from you. So that would be my advice to you.
All right, and definitely we have the retail investors, we have institutional investors. What's in it for the institutional investors?
So we have altogether in this fund, we have altogether about 14 institutional investors who have provided the initial capital. Those are made up of pension fund administrators, insurance companies, and banks. Those investors are getting commercial returns on the monies that they invested, but beyond that, they're also able to showcase it to their clients, and use that to attract new clients as well. So on one hand, they're investing to get a return, but on the other hand, it's a product that they can also sell to their clients to ensure that their clients get the benefits of home ownership.
All right. So at what point do we see action? When it comes to liquidity, and we're seeing people actually accessing loans.
We are seeing action, as I said. We're over 1,000 units now in terms of mortgages that we've issued. We've disbursed over 63 billion naira. 63 billion naira to individuals who have bought properties and are living in those properties now. 1,000 units could potentially be 4,000 individuals that this has impacted, assuming a family of 4. Beyond that as well, that ecosystem that it is supporting, you have builders, you have welders, you have plumbers, you have electricians, you have all of those things. So the impact is far-reaching for this program beyond just the home ownership, but what it catalyzes within the housing market, within the construction sector, and the jobs that it creates as well. I think when the government thought about this, it was all of those things that was envisaged. So not just someone owning a home, but how you're able to catalyze the economy by creating jobs, by providing food on people's table, by ensuring that Nigerians are gainfully employed in a sector that is strategically important to the country.
All right. So what else do we see, from here? Are we seeing more, issuances? What's next?
So we expect that this issue, the 250 billion, will be exhausted by the first quarter of next year. It then means that, once we prove that concept, which we are proving that is successful, we're then able to approach the market again to raise additional capital to continue to do the same things. Like I said, the target is ₦1 trillion, and we hope that we can get to that trillion very, very quickly and then start all over again.
Right. All right. So, definitely we know the CBN MPC, they're meeting today. They're going to give us direction, for lending rates. And I want to imagine that even if the central bank or the MPC keeps raising interest rates, it's not going to affect this.
Well, it makes the cost, raising interest rates makes it a lot more expensive on one hand, but like I said, our rates are fixed, so it will not impact it.
Fantastic.
But our hope is that we'll see rates continue to gravitate lower.
Yeah, we hope rates keep going down. At this point in Nigeria. It was great having this conversation with you, sir. Mr. Wale Odutola is the Group CEO, ARM Holding Company. Thank you for coming on the show today.
Thank you very much, Larry.
Thank you, sir. All right, we'll take a break now. When we come back, we'll find out what to expect for the MPC meeting today. That's in a moment. Just stay with us.